Welcome to another day in the Matrix. This is Red Pill Podcast number 42. I hope everyone is having a beautiful weekend wherever you are, or a beautiful start to your week if you're over there in Australia and New Zealand. Sending everyone lots of love. It's been quite a week in crypto, pretty choppy, but we're going to be starting off this episode actually with the dollar index, the DXY. And it's because we're seeing some things happen in the chart, and I think that it would be a good idea to review everything that's happened. We're actually going to do a full-blown analysis on the DXY, and then we'll get into Bitcoin, a couple of charts that I've been going over lately, but a recap of the bi-weekly chart that we spoke about last week. Big reason is because today will be our bi-weekly close. And I was sharing a chart with everyone last week, which had the bi-weekly candles and the 34 exponential moving average. So we're going to definitely do a recap of that. And then we'll be getting into Ethereum, XRP, Polygon Matic, Algorand, Decentraland, Mana, Cardano, Cosmos, and maybe I will be doing a couple other just breakout coin follow-ups. Some coins that are looking juicy, ready to move, so we'll do our best to get through all of those. Might end up getting to around 5 to 7 altcoins this episode, so definitely if it is the morning time, go ahead, grab yourself a cup of coffee or tea, get yourself relaxed. If it's nighttime, get yourself a glass of wine, beer, scotch, blunt, beverage of your choice, whatever you like. I hope everyone is nice and relaxed. I believe that, the last couple weeks in crypto have been shaking a lot of people out. It's quite incredible to see the sentiment change so dramatically, and I completely understand why. A lot has happened regarding the market from where it was back in November to where we were today. And kind of the thing that I've been anticipating was somewhat of a boring, arduous, just a lame January. That's been kind of like what I felt ever since Bitcoin was trading back at like 47, 48K. Once we started making those 666 connections going back to March 11th through 13th, which were the pandemic starting dates back in 2020. Once we got through those 666 date connections, it further confirmed some of the feelings that I had in late December about this arduous, slow moving, boring January. And we do have some coins that are sort of part of the liquidity. How do I say this? I've been perceiving the altcoins lately as like a big liquidity shift from one altcoin sector to another altcoin sector. And if that confuses everyone, that's completely fine. So basically what I'm trying to say here is back in the day, we used to perceive alt seasons where like Bitcoin would give up its gains after having somewhat of a big liquidity injection. And then after a pullback, when Bitcoin recovered, we would see the dominance start to break down for Bitcoin and, get to the 30s. Right now, I believe Bitcoin dominance is around 40. And then what we would see is, so right now Bitcoin dominance is 39.5. So then what we would see is a shift of dominance into XRP and into Ethereum. And that would absolutely move the altcoin sector as a whole. And what we've been seeing pretty much since April, where Bitcoin hit the all-time high, the move that all the altcoins had between, I'm just going to show you real quick on this total market cap chart. The move that we saw everything have around this time frame, pretty much in the start of 2021 through May, this was like the first alt season. And that was because everything that was trading on exchanges before this point pretty much went all the way up to new all-time highs. And we've actually seen some particular projects break through this structure and make some new all-time highs. And they're actually at all-time highs to this day and trading sort of within that region. And this is actually giving us a little bit of a different picture than what we had back in 2017, 2018. Of course, we're seeing something different for Bitcoin. Kind of something to expect now for Bitcoin, given that it's been 13 years of trading and it's quite a mature asset. Another thing is XRP. I do have to make a video on this, but this Bitstamp chart is absolutely amazing. I just want to show you this really quickly. So the Bitstamp chart really tells us the whole story, right? People actually forget this time period. And, when I first launched my channel, XRP was probably in that 30, I want to say it was in like 40 cents. But when I started my mastermind course, XRP was below 25 cents. And this is when I was working with predominantly private clients, and I was, dealing with my course more privately, behind the scenes. And then I launched my YouTube channel somewhere into March. That was when I really started actually like making content for it. And at this time, like literally XRP maybe 40 cents. And I had very little following, maybe like a couple hundred people. But, people from back in the day, like, trying to remember, probably Jody remembers, Evan remembers for sure, Robin. There's a bunch of people that have actually still been chilling in our community, and it was around this time we were calling for a breakout of XRP for the first time above $1, right? And that happened, and we did that using Gematria. But that's not what this is about. I'm not one of those guys that likes to talk about what we've called necessarily. I'm not a predictions guy. I don't really care about that. But the reason I'm bringing that up is because at this time, I was very adamant telling people that I don't think XRP is going to break into new all-time highs just yet during this run-up. And when I was doing that, when I was speaking those words, I was getting a lot of hate, predominantly because I had a small channel and because I was using Gematria, which was something that nobody's really ever showed. And I was using my kind of intuition for the most part, but it was really me just saying that, this coin isn't ready just yet. And this was after the SEC dump, obviously. So we're talking about this. To me, when I saw XRP stop out at $1.96, and then here when it had this correction because of Bitcoin, and once Bitcoin has a huge dump on May 19th, everything else came down with it. When this happened, it really solidified, like, wow, like this coin is one of those coins that I think it actually signals the end of runs. And if it doesn't have some sort of insane straight line breakout like this, that the bull run for crypto isn't over just yet. And that was one of the markers that I've spoken about for quite a while. And that might actually be a popular opinion across other XRP channels. It's not necessarily the last to move or the last to hit an all-time high. It's just one of the last signals that a blow off top for the market, for the cryptocurrency asset class, is coming to a conclusion. Then we could expect what's called a bear market, all right? So we've yet to actually have this moment, this huge liquidity injection and a flip of dominance in XRP. But I want to go back to this time just for a second because this was an important time. When I was back here saying that XRP would not go to new all-time highs, I was anticipating it to make moves up into pretty much where it was. I said $1.76 at first, and then I was considerate of $1.86, and the reason for 186 is because that comes back to Gematria with Ripple. So around here, it was amazing to see it hit 196. That was definitely a bull trap because it had people thinking that that was the move that would head it to new all-time highs. And then here we had this textbook bull trap where, like, after we have a bigger rejection, we come back up, get rejected again at a lower high, and then follow that with a dead cat bounce. And then this took some time to bottom out, but where it bottomed out was 51 cents. And again, that was another thing that we called, because we used Gematria, and XRP equals 15 in Chaldean, and 15 mirrored is 51. That was one of the ideas behind that. Along with technical analysis, because this area right here of 51 cents, 55 cents, it's all in alignment with the prior highs before the SEC dump, and after the SEC dump. So you can tell that 50 cents is a very solid level. I would call it 60 cents now. It's kind of shifted up a little bit, and that the reason for that is because that's the absolute highs of those two moves, and then also it is the back test of that wick. And pretty much what we've seen going down to 69, 68 cents over the past, pretty much the new start of the year. So what are you talking about, Jordan? Why are you saying this? Well, back here when people were getting mad at me and calling me bearish on XRP because I wasn't saying that it would go to $1, that it wouldn't go to 330 just yet, it wouldn't break new all-time highs just yet. When I was saying that, I was also exposing to the world that I thought that if XRP is going to have a parabolic advance finality to its bull run, it's probably going to be $7.60, upwards of $15. So I know I've had a lot of people join this community recently and they haven't heard this sentiment yet about XRP. I know there's a lot of XRP holders. And why is this important? Because again, I am still under the impression that XRP is the finisher of the bull run. It is the one that ends it all. So if we see XRP dominance in this run start to tick to the upside and we start seeing it break out parabolically, that's a huge signal to all of us for every single altcoin holder in every single altcoin to start taking this shit a little more seriously, right? Now, I'm going to try my best this whole episode to be super thorough. You know, this is zero emotion. This is just the facts. This is what I've looked at in the charts. And I wanted to start with this part of the episode discussing XRP from this long-term time horizon, because I believe it is crucial, especially for people who are looking at XRP charts and they don't have this chart. The one showing that this thing used to be sub 1 penny. And it traded pretty much sub 1 penny for 1,320 days, right? This arduous period of time led to this. It led to a gain of 61,000. Actually, it's upwards of 70,000% if you count buying like the extreme oversold levels. So all the TA that I've ever done that got me to the 760 position all the way up to 15, it's in alignment with what XRP has done in the past. It's in alignment with the idea of diminishing returns as a market cap grows. It's in alignment with Gematria. It's pretty much in alignment with everything. But technically, if people are not necessarily fond of Gematria or they don't understand it the way some of us might, some of the decoders in the community, we could go through it on a technical perspective as well. So I don't want to do that this episode because it would take up too much time, but I do have a video that I'm planning on coming out with as part of my exit strategies, which that'll be a surprise that I want to talk about more later in the month. But for now, this move of 760 to 15, I also got a lot of hate when I exposed that. When I said that for the first time, when I said that I don't see XRP going to a new all-time high back in April and May, I got a lot of hate. And when I said that it would go to 760 to 15 for the end of the run, I also got a lot of hate. So this coin is very polarizing, and I think that this is a coin that it teaches a good lesson for those that are more conscious, more aware, you know, red-pilled, if you will. The people that are a little bit more savvy with how this market works, which is a controlling of emotions, and when does logic get sidelined because of hopium? And this is pretty much the only coin that I've really seen this happen with. And it has a massive community. And I've always tried my best to help the XRP army, to help the XRP community. And I feel like, especially around here, when it was doing a lot of the moves that we said it would, breaking, not getting the 330 here, rejection down to the 51 here, moving up to the 140, 150 around August, we called that as well, rejection into Shemitah. All of the moves that were happening with this, it was further solidifying how this coin actually works with the people that have come to my channel that were finding a lot of XRP content that was pushing these absurd $100, $500 price targets. Now, I don't say it's absurd because I want to diminish anyone's long-term investment thesis. If we're talking about the 2025, 2026, absolutely this thing could go to $100. But what we need to do as investors is stop getting so caught up in the result. Pay attention to the process. The reason we're able to see how this coin actually moves is because we're focusing on the process. And that's learning how this coin moves. So you can see here, this structure and the structure we're in right now, it is a very similar look. You know, this dip V-shape recovery right here is very similar to the C-word crash recovery here. This little peak up, you know, actually this coin has been more bullish lately than it was back in this mini cycle and it was back in this cycle. Here, this is obvious. This happens to almost every single coin. Once it's new, it just moves up in a straight line and then loses like 80 to 90% of its value shortly after. Coins do that now, and coins were not impervious to doing that all the way back in 2013, 2014. So XRP is an OG coin, right? It has a ton of chart history if we look at the Bitstamp chart. So for those of you that are big XRP holders, get the Bitstamp chart, do TA on it. When I release my full-blown TA on it, explaining why the $15 price point as a blow off top, like 14 to 15, is not necessarily ridiculous. Like, it has so much confluence to prior iterations of how XRP has moved in the past, then just take the time, do some TA on it. You're going to learn so much. And the big reason why I do every single video, I talk about XRP, Bitcoin, ETH, is because I see the way that these prices move. The way that these prices move for the market are based on exactly how it works with those three coins. So there are anomalies now, and these anomalies that we're seeing now are noticeable because we've seen new sectors show up, such as NFTs. We've seen, wow. Even the DeFi craze that was going on back here, I remember that pretty vividly. Now that kind of conversation is going away. There's just, now there's metaverse, and we're going to talk about a metaverse coin today, Decentraland. We're just seeing so much show up, but we have yet to see a shift in XRP dominance, and we've yet to see a really noticeable shift in ETH dominance as well. An ETH dominance shift plus an ETH parabolic blow off top is another huge signal of the end. And we haven't really seen that. We haven't really seen an exorbitant amount of volume enter ETH. And even though ETH isn't necessarily deflationary or disinflationary, it's just sort of like it's infinitely mintable if they wanted it to be, which is problematic. But it is a huge layer of the crypto market as a whole. Anyone who knows about ERC20 and just also some of the implementations of updates that are to come with ETH, and there's a lot of problem solvers out there. There's a lot of things that ETH should have solved already that it's kind of lagging on. But in my more esoteric opinion, I think ETH is being used to essentially, how do I say this? When Bitcoin priced everyone out by getting into the 30s, 40,000s, I think ETH is going to price everyone out with the gas fees. And the next move that ETH makes, it could be very FOMO-like, but I'm thinking long-term here. Like, I'm talking about into the 2025 year. I think ETH is going to become like the second Bitcoin in regards to the way we speak about it. So when Bitcoin went to 17,000 and then came all the way back down to 3,000, of course, it was like a shit coin again, and everyone talked shit about it, and it was super negative. The whole crypto sector kind of just died away during that time period. And the same thing with ETH. I think ETH dropped to like $90 from the all-time high of $1,440. It dropped to like 90 twice. It dropped to 90 during the selling climax, and then it dropped to 90 again back in the C-word crash. So yeah, that could really like destroy a lot of people. But when ETH moved from 90 all the way up to like, what is it trading at now in the 3,000s, you can see now that as the second highest market cap coin, it's still moving. It just, how long was it in that period? Quite a while, actually. The same thing with XRP. XRP was in the sub 40 cents area for so long, and it gave us multiple chances to actually get out above $1. So anyways, I don't want to get super off the rails, and a lot of people might not like this section because it's like Jordan's talking about XRP, and XRP is 70 cents. It's not moving. I've seen a lot of comments like that, but you got to remember, man, like, this is a long-term game, and the XRP idea here for me is more of an indicator, okay? It's more of an indicator rather than this go all in and have your number one position in your portfolio be this coin. If you're buying this coin at oversold levels, of course it's a fantastic investment because you're evergreen, right? And this coin has made a huge stair step up, right? When it came down during the C-word crash, it actually back-tested lows, but then it was a dramatic recovery. All of this since, and we're still in this SEC drama. So Just be patient if you're in this project. Be open-minded to how this coin actually works. If you have a big position in this coin and you're thinking about de-risking, you know, all the levels are right there in front of your face. You have the lower high level of 2.4 or pretty much $1.96. You have the prior all-time high of 3.30. This is thin air, guys. Anything above 2 is thin air. So once it gets there, it's price discovery, you know? It just takes time. It takes time. And this could be a potential huge cup and handle. And I don't really want to call it that just yet, but I'm just, for those that are interested in this project, definitely get this Bitstamp chart and go back and do TA on it in these years. And you're going to see just how mind-blowing this all is. And also do some TA on Dash, do some TA on Neo, on, you know, some of those OG coins, because you're going to see like the way that they moved was in harmony. And lately what we've been seeing is back, let's just say back October, November, we saw the moves of Luna and Solana and Constellation DAG and I believe also Algorand. We're going to touch on Algorand today. And then lately, since Phantom has started to move, we're seeing Harmony 1 start to make some moves. We saw Crypto.com and Basic Attention Token move at the same exact time. What we're seeing is certain charts are starting to look almost identical to each other. And that's a sign to me that they are shifting liquidity from one ecosystem to another ecosystem. Something to pay attention to, actually. Something that, you know, for the traditional TA analyst in crypto who thought about the traditional alt season, we might still get that traditional alt season perhaps into March, into April. But for now, we've learned a lot through this concept of like buying the sectors that have the most use case and fundamentals into what we're about to see happen and take over in the new world, like VR, so virtual reality, just automations, anything like that. And then of course, like the shitcoin conversation is a separate one. You know, you really don't know with those. If you're somebody who likes to hunt out shitcoins and just look at like, and again, I'm not being disrespectful. I'm speaking honestly here. There's a lot of money to be made with them, but you really have to know TA. You have to know when to get out of them because you barely have any chart history. You can have the rug pulls within a 1 hour candle. I mean, they're really volatile, and you're kind of looking at it like a gambling perspective. Like you might lose 5 and then win 1, and that's fine if the 1 that you win keeps you in positive ROI. But if you're just doing that all day and churning stables or Binance, your BNB through like PooCoin or something like that, like if that's your method, sure, that's fine. But like, you know, you really want to keep track of your losses and you want to make sure that what you're doing actually is a net gain. So where do we go from here? You know, there's so much really to say, but I remember what it was like back here when we saw an undervalued XRP and just all the moves it made, and how I was sharing my sentiment before the moves happened, and how I was getting a lot of negativity for it. And I don't care at all what people think. Okay. To me, when I get a negative reaction to something that I believe is a logical position, it actually further, it makes my thesis more concrete. It confirms my thesis, because the masses are always counter to where you want to be. Like if the market is extremely fearful, of course you want to react with greed. And we see how well that works. Every single time that you act that way, you're pretty much on the winning side of it, because the majority are reacting in emotions. The majority aren't reacting based off of the way that markets typically work, which is go the opposite direction of the herd. Just 1 second. I'm gonna drink some espresso. So let's get into it. First, Bitcoin logarithmic growth curve chart. This is beautiful. We've seen. I'm just gonna recap this chart really quickly for those of you. So this is the index chart on Bitcoin going all the way back to when it was 1 penny. So it's a huge amount of time. And we have these lines. This orange line is the main line that once we get above that, we've typically seen Bitcoin hit the top of the logarithmic growth curve chart within 14 to 21 days. And then we have the main support line that we need to hold being this red line. And this blue line that we have here, the blue trend line or trend ray, is in alignment with this last buy signal on the hash ribbons indicator. So this hash ribbons indicator buy signal flashed, and it tells me that we should not be closing dailies below 38,180 for the rest of this, or forever, actually. Now, can it close below that? Absolutely. Anything's possible. But this indicator was only wrong one time, or it was only invalidated one time. The word wrong is wrong. And it was right here. It was the black swan event of the C word dump. And this structure that we're in right now is pretty interesting because around here we did have a Mercury retrograde to this dump, but this was totally ritual for other reasons. The reason behind this is because this time frame was 222 months before 9/11. That was the reason why. And when we measured our move from this event over to where we were last week, that was 666 days. So far, we're out of that, out of the woods on that. And we also don't have another eclipse until late April. And we typically see that the eclipses play a role in big dumps. Now, what's been playing a role in big pumps, believe it or not, is Mercury retrograde. So I'm going to go to that chart next. But I just wanted to show you how this red line, since we brought it up in the last couple episodes, got back tested, and since we've bounced. And we'll really get to confirm that low once we break above 52,000, this high right here, 52,100. Until then, we're just stuck, you know? And you know how Bitcoin is, man. This shit will just move if it wants to. It's crypto, right? It doesn't even matter if it's the biggest market cap or lowest volatility crypto. It's still a crypto. And we've seen Bitcoin, when it wants to rage, it could rage. Like, it moved from here, 16K to 42K in, a month and 12 days. So it could still move. And when it moves is when there's the least retail in it. Really, like, it's about here that the New World Order starts, like, piling in, and then it just takes a couple orders to create green dildos, and then the FOMO comes in. But it doesn't, it's quite dramatic how the volume will change so dramatically just off of a couple of green candles when the masses should have been buying those red candles. But anyways, so what we're doing here is a huge ascending triangle. We have the resistance here around 60, it's pretty much around 62, 63. That's the main resistance, and that's in alignment with this white trend line. And you can see the white trend line plays a huge role. We slightly got above it for a moment here back last year around the same time, and then we came back and back tested the green line. Then after coming back up, when we broke through this line right here was the May 19th dump, okay? And then we went to the red. Then here you can see rejection off this thicker white line. This is the 0.5 Fibonacci. Traded around the green line, got above it, but still couldn't hold it. Went below. And then since we backtested the red line. So this red line is the main support, and this white line is where we seemingly get gravitated to. And that level right now would be in the 60s, the mid 60s. And if we were to put this around, like, let's just say late February, that's pretty much at all-time highs again. So, I've been sharing my scenarios for everyone, the idea of a bull trap to end the bull run for Bitcoin, but that liquidity will shift into the altcoins, and then we'll have a traditional alt season where we'll see XRP and ETH finish off the run. And of course, that will bring gains to everything else. Coins that are isolated, such as Solana, Luna, for instance, these coins are probably done. They might double top. They might have a little bit more juice to make a slightly newer high, but they should not continue substantially higher from where they are right now in regards to their current all-time highs, as opposed to a coin like VeChain, for instance, that if Bitcoin was to move up to 62K and get rejected, and then we were to see ETH and XRP break out, we will see a coin like VeChain make 1,000% gains. Most likely 700 to 1,000%, whilst Luna is most likely not going to make 1,000% gains, right? So that's what I mean by that statement. Can Luna or Solana make a slightly new all-time high? Sure. But does that really matter? No. You kind of want to be in coins when they're not exciting, you know, and I go over this almost every episode, how when I'm looking at coins that have already broken out of the box territory, like for Bitcoin, the box would be somewhere around 62 when you're doing a Wyckoff method. Here you have it 30 to 60. That would be like your box. When you break out of the box to the upside, that's typically not a buying opportunity. You want to buy at the lows or support of the box, which Bitcoin, I mean, honestly, that's the reason why I haven't been buying Bitcoin, because unless it wants to come back down to the 30s, there's really no reason for me to, because I accumulated all my Bitcoin below 10,000. So it just depends on where you're at with your investments. Everyone has a different sort of, you know, investment thesis, a different portfolio, and we have to go off of that. And that's actually what my investment strategy my exit strategy blueprint that I'm coming out with soon is going to be all about. Kind of teaching people how to stop perceiving everything based on what YouTubers are saying and what, like, you know, getting so caught up in what coins are breaking out when another coin is down. Like, it's going to be a little bit more philosophical. It's going to be a little bit more strategic regarding how to deal with your current portfolio. And for wherever we're at when that exit strategy blueprint comes out, what are you going to be able to do to secure a better exit from this market? But also, if you don't have a portfolio at all, what would be a quick way of just like getting into this market safely, conservatively, but to get those gains, instead of right now, which most new people are doing in crypto, is they're FOMOing into coins that are already up because it's exciting. You know, coins that are doing well are the coins that get publicity and lots of coverage, but you always want to go in reverse. So this red line bounce is pretty beautiful. This green line looks like it's about pretty much 53, which would break the highs in the structure right there on December 27th. That would be a good sign. We've seen Bitcoin likes to do this after coming back to the red. It likes to get above that green. And if it does that and back tests a prior support level, a prior resistance level, that is double bullish. So what that would look like is Bitcoin getting slightly above maybe 54, coming back down for a minute to backtest 50, which would be the resistance here. It would be the resistance here. And it would pretty much be all the resistance or all the support going back here when Bitcoin was in this distributional crown top. So that would make the most sense. And then what would that look like if it went down to like 48, 47? Is it would look like an inverse head and shoulders. And I believe I drew that out for you guys last time. It would be something like this. So you have left shoulder, head, right shoulder, and then continuation. And this is where you would look for the bull trap. It would not be looking for the bull trap right here, because this would be a technical fake out, and I would just be cautious there. That doesn't matter though unless you're a trader. So let's move on to the Mercury retrograde chart. That's definitely something to consider because we spoke about that a couple episodes ago. I actually made a full-blown video about it for the Patreon. So if you guys haven't seen that, definitely go back and watch the Mercury retrograde analysis. Here you can see I have mapped out eclipses. Somebody asked, why do you say back-to-back eclipses? Well, because there are isolated eclipses where there's just one eclipse and then it takes, like 100 days or so for there to be another eclipse. So I'm going to start only really caring about eclipses when there's a total eclipse involved. When there's partial or penumbral or annual, I'm not really that concerned. It's more over these total eclipses that have been seemingly bringing us the big moves. You can see right here the total lunar eclipse that was happening around late May was within the time frame of that May dump. And then you have the recent solar eclipse, which was the day of that dump on the 4th of December. And since we've actually filled that wick and gotten within that area, let me show you something really quickly. I'm going to turn off these moving averages and we're going to get back to let's look at a 3-day chart just for fun. And we're going to map this all out. Okay, so what is most similar right now is this structure. This structure right here, because we had a crown top and this crown top had a dump which ended the distribution, and then we built a support there for some time. This area we came back to 39,700. It's a very noticeable support level, and I'll show you right now by turning off all the drawings. I'm going to put my cursor right here. You see where this is backtesting? It's literally backtesting the prior highs of January, the prior highs of June, the support of September, This backtest was a key level to backtest. So holding this level is everything, okay? From a technical perspective, if Bitcoin closes a weekly below this level of 40,000, that's lights out. It's probably going to move down to 30. It's just a choppy zone. Sure, it could get caught at 33, it could get caught at 34, but I mean, it's going to start trading into the 30s. Now, what you would like to see on the upside is a break of 52. So that's your range, everyone, 40 to 52. And we could trade in that range for a little bit of time. I would not be surprised if we did. Technically, though, you do want to see by like mid-February, you want to see us above 50. By like mid-February. That would be like a technical thing. Can't really explain the reasoning why. It just has to do with the timing of structure. Having it go much longer than that would be a little much. But if we take off of this move right here from May 19th and measure it out to where we got this green recovery candle on the end of July, that's 63 days. And if we were to do the same thing over 63 days, that shows you about where we would be having a similar move early February. This makes sense too, because we have the new moon in early February, and that new moon could trigger the structure to have a reversal. And that would also be around the ending of Mercury retrograde. So this was a Mercury retrograde as well. It was a boring sideways Mercury retrograde. And that's the other reason why I've been reaccumulating. I didn't go all in here. I didn't go all in here. I am just gobbling up like a little bit at a time on every time we get a dramatic move to the downside, because I have thought this is possible. You see this, how we do come down again. So right now, this green candle here is akin to these candles here. That's kind of the structure. You see these two high candles up here? That's very similar to what happened here. So you have the big dump. You have a relief rally that doesn't get too exciting. Look at where this relief rally came up to. It came up to the prior structure highs before we had the distributional top. You see? So you have these two candles in alignment perfectly with that rejection point. Then look at this. Big dump. Then you come up, but where do you get rejected? Boom, right off of the structure highs. It is the same move, guys. It's the same shit. It's just slightly higher, which is what you want. You want prices advancing in the upside due to scarcity in the Bitcoin blockchain. Anyways, so dump, rejection at the same high levels, back to back. We had the same thing happening, both around eclipses, both leading into Mercury retrograde. And you see this dump right there, the low. That is most likely the low. That's the lowest we'll go. And that also makes sense based on what I exposed with the Bitcoin logarithmic growth curve chart, staying above 38 on the closes, staying above 40K, especially on the weekly closes. So remember what I taught you guys about this red dev line? The 236 line, closing weeklies below that, I think it's pretty much lights out, because that would be structurally below 40 and below this red dev line. It would have to quickly V-shape recover out of there. You know what I'm saying? Like a major, major, major bear trap. But from a technical perspective, holding this on the weekly closes would be best. And right now, we're above that shit by enough to be okay. And we have CME opening tonight. They could dump us down a little bit, but I don't think we're going to go from having a green day to negative 7% down in like 2 hours. That sounds dramatic. Anyways, the point I'm saying here is this structure is pretty damn similar. And if we were to consider where this is right here and move it over to the next big low, 27 days later, let's do that. Of course, it's going to be the same time frame, early February. So this tells me we might get up a little bit, come back down again for another triple bottom, and that might be the relief. And that's a good time. That would make a lot of sense. That's your transition into Chinese New Year on the 1st of February around the new moon, and then 5 days after, you start to get out of the new moon energy, and perhaps they push us down a little earlier. And I believe the full moon, let me just double check this for you guys. Of course, just a recap on the moons. The new moons are typically microcycle highs, and the full moons are typically microcycle bottoms. So you can see right here, the February 16th. I mean, we're talking about a 5-day, a 3-day candle difference, So if we were to go down into February 15th, good old Valentine's Day. I think that'll be the time frame. Yeah, the 14th is Valentine's Day. So yeah, Eros. That's where we get eroticism from. That's baby Cupid, which is horrible because it's literally originally a pedophilia holiday. Anyways, it is the red pill episode. We gotta talk about the truth. So this structure right here is looking solid to me. Now, until we get above 52, I am not throwing a party. Above 52 with a 3-day, 5-day closure, it's probably going to move up to 60 pretty quickly, 59 to 60, and that's when we would want to get cautious again for a bull trap, but that doesn't mean shit because this bull trap would be so bullish for the altcoins, and I know a majority of people are altcoin holders. So for the people trying to get out of Bitcoin, you want to consider that, and that's going to be all part of my exit strategy. I just don't know if Bitcoin's going to have this type of move that fast, so I'm not really rushing anything. This, let's just say if we came off of the 6th lows like this, up 100 or 83%, this would be the same. So 78 days up 83%. That puts us at a new all-time high. And if once Bitcoin makes a new all-time high, I think 3 times a charm. Like we had the 1 breakout, the 2nd breakout, the 3rd breakout is probably where we're going to have it end. So then we would look for dominance at that time. Because if Bitcoin dominance starts getting above 50 or some shit and we have an all-time high, well then we're going to have a Bitcoin blow off top. And then it's like everything that we've been perceiving from the month of October into November will just come, and it came at a later date. That would be amazing. Another thing I'll say is, let's just say Bitcoin comes up into like 60 and gets rejected. This move here, that rejection, flowing liquidity into the altcoins, will bring most of the altcoins that are suppressed right now up to like the 4236. But if Bitcoin was to enter price discovery and go to like 80 or 90K or even 100,000 into like, April, then get rejected, and then we had a switch in alts, oh man, those alts will all go up potentially 1,500 to 2,000%. So you kind of like, for the people that are haters on Bitcoin, you kind of want Bitcoin to do a blow off top. Like, it's more bullish for your altcoins because the money in the sector goes from Bitcoin to where? The altcoins, right? So if Bitcoin only prematurely goes up to like 55, it's not going to create as much of an explosive alt season because this structure right here is so different than when Bitcoin has a blow off top. This is a very arduous 1-year long structure. So for anyone that thinks that there's going to be like 3,000, 4,000% gains if Bitcoin gets a bull trap at 59, 60, no, that's less likely than if Bitcoin was to break into price discovery. Okay. And that's just technical. That has to deal with the way market cap works. The only way that otherwise is if we had new money entering the market after Bitcoin had a blow off top, which is not how it usually works. It's the same money going from Bitcoin into the alts. There's no new generated money. So if we're looking at things like stable coins and their market cap to be able to determine this, most of the most of the stable coin minting has been going on around this time frame, right? It's not just anyways, I don't want to jump around too much because I know this could be confusing for some people who are newer, who don't know too much about how this all operates, but just remember this idea, okay? Off of the lows here, measured out to recovery, puts us somewhere into like mid-February. Will we get an explosive move like this? Perhaps. Then we look for around the 58 to 62K region for what's called a bull trap. If Bitcoin gets rejected there and rolls over, that's exciting for the altcoins. If Bitcoin enters price discovery in late February into March, that's extremely bullish for everyone, right? And that would be just an extended cycle by an extra 2 to 3 months. Now, the conversation of getting past April is where it gets a little bit more difficult to track, just because April 30th we have an eclipse and May 15th we have a total eclipse. We have a total lunar eclipse, and the last time we had a total lunar eclipse was leading into this bigger dump over here, and that's at the same time frame. So we had highs in April, we had the total lunar eclipse in June. Then we have here the total lunar eclipse in mid-May. It's like within a small little shake of each other. It's just slightly different, 30 days backwards. But this also includes a Mercury retrograde, and that was sandwiched within the same time frame as this. So it further confirms a possibility of a dump into that time frame, or perhaps a bullish move before it into a dump a little bit earlier than that. And that would be almost identical to what we got back here in the last year. April highs and big May move down. Sell in May, walk away. It wouldn't be anything weird necessarily. Now, let's go to the daily just really quickly. I'm going to show you this firmament. And this isn't the main firmament that I want to talk about, but it is something to consider. So I'm going to just bear with me. I know it might be hard to see, but you see this firmament. It started going here, and then first rejections, a bunch of days. We're talking about six or so daily rejections, and then again here about 3 or so daily rejections. Then a rejection off the current peak high. Here again, bunch of days here, and then a bunch of trading here. And lately we've actually left it, but I'm not considering this the main firmament. I'm going to show you this in 1 second. So, but for now, this is escaping this firmament, and typically after that we have seen a little bit of time going sideways and then recovery out of it. We've even seen trading on the down on the outside of it, but this isn't, again, it isn't my main firmament. I'm just looking at it as one iteration. There's another iteration that I have that's a lot more similar to what happened back here. And I'm going to just show you that in 1 second. But I did want to bring up this firmament idea and how we are breaking out of it right now. Until we get some volume in this market, there's really nothing to give a shit about. Okay, boom. So this is my other main firmament chart, and this is the macro. This is the macro analysis. So we have here going all the way back from October. You guys have seen this before. Every single top hitting the top of the firmament on every new moon, right? So here we started a new one. It is very similar, and it's I like this one more because it's a little bit more symmetrical, and we have 2 touch points at the top, right? We have this one touch point here in October and this other touch point in October. Now we have some time to get out of this baby. So look where that puts us, the end of February. It'd be very interesting if we had something like this where, you know, I don't want to give hopium, but remember what we talked about with that inverse head and shoulders? So imagine we take off the lows and go to like about the highs. We're looking at 18 days. So let's go 18 days over. That puts us to around the end of this month. So around the end of the month, imagine we had something like that, where into the 28th, we literally hit the firmament. Boom. And then to start off the month, we get rejection down to the 0.5 fib, which is right there at 47,000. Create that right shoulder, then blast out. But right as we're starting to blast out of it, we actually do trade on the outside of it like this. Double bottom, W breakout, back test the neckline. Boom. You see this? Structure is just what happened back here too. Okay? So you had your triple bottom scenario, but this recovery I'm just considering could be slightly different because we've already done something exactly like this before, and Bitcoin doesn't repeat identically. Again, we went over the scenario a little earlier. I'm giving you a new scenario now. Okay, I'm giving you the inverse head and shoulders one. So this is the second thing we could consider if we're going to perceive this, because Bitcoin closing, at the bull trap at the end of this month would be crazy. That's, in my opinion, that's too bullish too soon. Most likely not going to happen. It's possible because we've seen Mercury retrograde before, like here. Bitcoin pretty much just went up in a straight line, 62% in 21 days. A similar move would be like this. That would be the last day. Literally. Yeah, come on. No, I don't know. It's possible, but I'm more likely leaning on this scenario or leaning on this scenario where we're actually going to come back down to the similar levels of like 42K after a slight recovery, or we have the rejection at the 52K level, which is all the resistance we've had here, 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 and the support level here. Because remember, when we're bearish, we flip support as new resistance, right? So that wouldn't be weird to get rejected again. And this would be where you want to get kind of cautious. So then coming back down, ride on the outside, just like we did here when we broke out of this white firmament, which, by the way, this firmament was in play for a long time, man. 270 days, geez. So here, the new one, oh shit, yeah, it's about the same amount of time. It's about 230 days. So that would be super interesting to see that do that. And then into mid-February, you see right here where I put that bottom of this W, it would be on the full moon. That would be so bullish, right? and then rejections potentially into the 786 below the 888. That would be the key area where like you really want to get ready for some sort of resolution, right? Either resolution of rejection, and you'll know a true rejection once you break structure on the downside. And unfortunately, it's hard to time that because crypto is such a wide range of price. Your golden pocket is everywhere between 10% to the downside, about 13 or so percent to the upside. So it's a big range. That's what's annoying about crypto sometimes. And if you consider this for Bitcoin, imagine what that's like on some of the altcoins, some of the lower cap stuff. It could be like a 25% range to determine resolution. That's why it's all about not being greedy. If you get a 3x or 4x into these moves, you want to de-risk. You want to consider removing initial investments and play it like conservatively. Don't get super greedy, because if it starts to roll over and then you're waiting and waiting and waiting, and then we have a dead cat bounce, it's like shit. You missed out that whole opportunity to consider your de-risking. So this would be a nice setup. Basically, inverse head and shoulders, W that rides on the outside of the firmament, double bottom. The second bottom comes into the full moon of February, and then we essentially have back test of the neckline into late February, and then a breakout into a new monthly close high somewhere in through the transition into March. So a high that's higher than 52, and then throughout March things are looking okay. And last March you can see we had a rejection into late February. We came down into the transition of February, and then we went up in through the first half of March. That was in alignment with the new moon, by the way. Then the last high really came in around the new moon of April. This was about 9 days after Satoshi Nakamoto's birthday. So again, we have April 5th is Satoshi Nakamoto's 47th birthday. 47 is the atomic number of silver, so 47 is a huge number. And silver has everything to do with the moon. Also has to do with the white rabbit. But anyways, this eclipse that's happening in May, I'm pretty sure it's the lunar eclipse, total lunar eclipse. Let me just double check so I'm trying to remember these things more, even though I remember so much already. Yep, I was correct. So it's total lunar eclipse in May. That'd be kind of interesting. And disregard this fractal. This fractal is just the fractal going back from here, from the May dump throughout recovery. And this is, it's just interesting. I don't like fractal analysis. I don't really play too much it's not even like a tertiary role in my analysis. It's just something to have for fun. But that shows us, again, if we were to mimic the same sort of move from here, triple bottom at the lows, recovery into the high right here in October, it'd put us somewhere into like 90K Bitcoin. And that would be in alignment with some fibs in the long term, but I don't want to. This is ultra hopium, and that's not where my mind is at right now. I'm taking it one step at a time. So let's do the 2-week analysis really quickly and then move on to ETH and our altcoins. But I gave you guys like a really thorough breakdown of everything regarding the TA on Bitcoin, all the scenarios and how it'll play out for these alts. So I hope you guys appreciate that thorough analysis. Probably answers a lot of questions. And if you're confused about things, feel free to pause at certain times, take notes, go back, rewind the episodes. If something I say is confusing, you could always write a timestamp inside of our Discord to this episode and ask the community members for some help. That's what we're here for. We're a community. We're here to help each other out. Sometimes I'm speaking very fast, but it's because I'm trying to get a lot of information out to you guys. So anywho, the last episode, we started with this analysis of the 2 weeks, so the bi-weekly, and we have our bi-weekly close coming in tonight at around 6 p.m. or so, 7 p.m. Eastern Standard Time. And this was beautiful to see because we got a back test of the 34 exponential on the 2-week. This is a very textbook level. So once we back test this, we typically bounce. And we've seen this happen in the last bull run, in the 2017 bull run. So I'm just going to do a quick recap. We back tested it, quickly bounced back up. The second time we back tested it, we still gave about 54% to the upside before we closed below the 34 exponential. Okay. Then we have here another iteration where we trended. We had our blow off top in 2013. Around the new moon of December, came down, back tested the 34 exponential, quick bounce, and this bounce was from wick to wick, almost 100%, pretty much 100%. Okay, and this was clearly still a lower high, and once we closed below the 34 exponential on the 2-week, we entered a bear market. So closing below the 34 exponential on the 2-week is a signal of bear market. The only time we had that anomaly was right here. So even if we close below it in a bear market, it's typically holding structure. So we have our low and we have our higher low, but this was a black swan. And, black swans are part of the game. That's actually the best times to buy if it's a downside move. So anyways, I just want to get back on track. The 34 exponential holding that on closures, staying above that on closures is typically still keeping us in a bull run, especially if we have structure. So of course we have our low, we have higher low, higher lows, and then still higher lows. Even we did pierce below the lows in the structure here, and we're trading right on the closure lows of both of these candles. So that's another thing. That's why we're getting all this resistance around this level right now. It would be much better to close at like 44 if Bitcoin could just get some juice to not have a bearish engulfing below these. I mean, typically with candlestick analysis, you're engulfing candles from the previous candle, but let's just be open-minded to the fact that Bitcoin and crypto are very volatile, so you need to be a little bit more experimental with your analysis. And this is showing me that, all of our resistance that we're getting right now is at this level for a reason. It's the bi-weekly closures. So bi-weekly close right here and the open. And where we've back tested is actually the key level of that support on the wick and right here where we had some resistance, 1, 2, 3 candles. And then on that opening candle, we came and back tested it. And since, that's why this is looking like a huge head and shoulders. And that's not good, because if this is a head and shoulders that's going to end soon, it would still most likely have a relief rally off of this 34. But that gives me back to the first scenario I shared with you guys of the bull trap of Bitcoin coming up into the 60s, and then that's it. But technically you invalidate head and shoulders getting above 52. I know that sounds confusing, but 52K closing above that is really the savior here. And if we continue sideways, we could see some coins in certain sectors have a little bit of a pop, but every time we move down on Bitcoin, it's going to anchor down the alts. So in the meantime, we could have a repeat of this scenario where, again, we have all this time, 70 days or so on the lows. Again, that brings us into early February. Everything sort of brings us into early February in regards to pullbacks. Early February or the full moon of February, which comes in a little earlier. We could have a bottom on the full moon 5 days earlier, and that would be February 11th, guys. So perhaps February 11th or the first half of February is really what we want to keep our eyes on for any bearish prices. But we just had our full moon. Oh, our full moon's tonight, actually. Okay. Well, full moon's tonight, so getting through that time frame would be nice. Typically, we see our most bearish prices before full moons, like 2 days before a full moon. And we did see our bearish prices a couple days, days ago. It's basically less than a week ago. Anyways, bouncing off this 34 EMA is typical. It's very typical. Even back here when we were breaking below it, we never closed below it, and we saw a bounce. Here was great because it was a huge run, creating a new all-time high. But in these bear market scenarios, we have that 54% gain here, and then we had the 100% gain right there. So if that puts us even at a 30% gain or so from the bottom, we're looking at something like Bitcoin still getting back. Yep. Okay. So look, it gets us to about that 52 area. Excuse me. And that would make sense for that inverse head and shoulders move that I gave you in the prior scenario. So could be in play. And then we would have this 21 exponential on the biweekly to consider. So you see right here, that's the orange line is the 21 exponential. That plays a big role in resistance and support. And whenever we're below it, it's typically shitty, but it's been a great accumulation period for Bitcoin. Whenever we're above it and we actually maintain closures above it, like even right here, we didn't concretely close above it. And you see it led to back-to-back doji candles. These two dojis, again, giving us some sort of a sign of we're not ready to make a move yet, kind of an indecision candle, if you will. And then back testing the 34 2 times in a row before breakout. Once we're above that 21 exponential, you can see we kept holding it every single time we had a correction. And it led to continuation. So getting back above that 46 level or so for the bi-weekly next week would be huge. And that would be our monthly close. Yeah, so the last day of this month. If we can close that above 46, 47, that would be real nice to close the monthly above this 21. And what would be even more bullish is if Bitcoin can get to 52 rejection and still close at the end of this month in that short of a time frame. That would be really amazing to see. And it's possible because it's not really that much of a move anyways. So again, that's another bearish thing to consider is you see how this 34 exponential is right at 40,000, at 40,600. That aligns with what I was telling you about this logarithmic growth curve chart with this red dev line closing below that is bad. The same thing goes with this 34 exponential on the 2 weeks. So keep an eye on that, guys. I don't suspect we'll close below it this week, but next week again is our monthly close. So, or the next time the bi-weekly closes is in 2 weeks from now, which is the monthly close. So that's pretty much it. Your upside targets are somewhere around 52 for any rejections on resistance. Potentially, that would be the breakout area if we are going to continue. And then we would look to 60 for a bull trap. If we get rejected at 52, we would look for support somewhere around 46, 47 for an inverse head and shoulders. And then closing below 40 would be where we really need to get ready for further downside. That's the technicals. My opinion here is that we're more likely in a relief rally position than we are on continuation to the downside further. But again, that's more of a gut feeling, and that has to deal with the fact that we're in Mercury retrograde. We've already had a ton of downside. We've already had 2 big corrections off of hitting new all-time highs. I mean, this is kind of time for Bitcoin to either finish up or get ready very soon to finish things up. This huge distributional top area somewhere around 60K is another sign that, like, if Bitcoin can start to concretely close above those levels, you know, it's going to get exciting again, really exciting again for the crypto market. But until then, it's going to seem a little bit boring, arduous, kind of sideways and down. Let's move to ETH. So ETH's looking solid. ETH actually making a similar posture on the bi-weekly to what it did back here where it hit highs, got below this 13 exponential for a close, which we are doing right now. You could see where this blue line is the 13 exponential. We're slightly below it. You could see that right here. And then the next candle was recovery. So that would be interesting to see how that goes. And then we're going to look at our weekly. So this is where this is different. Okay, so this is different. Now we're seeing the 34 exponential as resistance. That is no bueno. Let me show you the 55. Okay, so the 55 is always like our last line in the sand for holding support. And this white line is the 55 simple moving average. That's right in alignment with these wicks right here and the rejections here and the rejections here before the blow off, this first blow off top we had in April last year. Here you can see that we're not spending too much time above this 33, like, let's just call it 3,400. We don't like to spend a lot of time above that, and that is exactly where we're getting resistance right now. So closing above this 34 would be nice. Again, we have yet to close below the 34 at all until last week. Wow, that's a huge thing to consider, but this doesn't look like a blow off, so it's not very... Yeah, super interesting, this structure. It's very clean in its move up and very clean on its move down. But it's at a higher high, so it's not a bull trap, you know? Like we have high, slightly, so double top, but then that double top led to a new all-time high where the new all-time high traded there for multiple weeks. It actually did break above highs in the structure and this high in the structure multiple times. So this is really interesting. Let's see where the daily is. Yeah, daily's giving us this kind of a... Yeah, this is interesting. Definitely interesting. Could see that we got oversold on RSI. We are getting a little bit of a push on MACD bullish on the daily. I kind of wanted to stay away from daily analysis just because it's not really that... At this point, it's not the most important on something like ETH. But yeah, this 55 sitting around 3,900, that's going to be a bitch, man. That's going to be annoying. That's the same area that like 52K Bitcoin. So when I was telling you about 52K Bitcoin, that's going to be kind of this 3,900 area for ETH. And ETH could recover that quickly too. Like you see this structure right here where we have a high, then a fake out continuation. So we have high, fake out, continuation of the downside. And then we structured on the bottom for quite some time. So this structure took about 12 days or so to figure itself out from that low. And that would put us pretty much into like the late part, the third, fourth week of January, somewhere around January 20th. Again, that's in alignment with a little bit of a relief rally for Bitcoin. Excuse me, I'm just going to drink some water real quick. Stay hydrated, folks. I got this really delicious coffee that tastes like the way like really high quality tobacco smells. It's amazing. So yeah, the main area that's going to be kind of annoying if we get bullish on the relief rally would be around 3,900, and then for support levels on the downside, holding 3,000 is the same thing as Bitcoin holding 40,000. Bitcoin holding 40, consider that for 3,000 on ETH, and daily closes of 3,050 or lower. That's where we would start to probably have some issues. And you see back here, when we made those exaggerated lows on the 21st and we came up, we backtested wicks down here for a bunch of days, and we haven't really done that so much since we've recovered a little bit off of these lower 3,000 areas. So that is possible, and that would look like a W. So if I was to remove all these moving averages, you're going to kind of see what I'm talking about here. So you have your first V, you have your neckline building, and you have your second V, and that would be your W. So something like this, right? And this is your clean neckline, and this neckline is in a Fibonacci level, the 618, of course. So this is giving us more confluence more reason as to why we're getting a lot of resistance here. It's because it's the bottom of the golden pocket. So just consider that, guys. Closures above this level here of 3,900, that's going to be very good. Now, one other thing to consider, let me try to delete what I just did. Boom. Okay, so this could be something too. Like, let's just say we back tested like this, and then we get above this yellow line and back test this yellow line with a bounce. That would be beautiful because we know that this yellow trend line is crucial. Highs, tried holding it as support, and then rejection here led to more downside. This trend line getting back above it would be a sign of a bullish recovery for ETH. Until then, it's kind of just squirrely at these lower levels, and it's hard to pick because it's at a decision point. It's holding structure though. We have lows, higher lows, higher lows. Technically, this is looking cleaner than Bitcoin. So just consider that. On the lows, we do have the 0.5 fib around 3,044. Closing below that would be problematic. And then on the upside, closing back into the golden pocket would be great. But I would get cautious around this 702, and Bitcoin getting up into 50 to 52 would probably be similar as to ETH getting back into 3,900. So you have both of your targets based on the movement of Bitcoin. It's going to XRP. Yuck, all these trend lines. I hate this. I don't like trend lines like this. I don't even know why I'm having all this on my chart. It's probably for giving someone a TA lesson. Let me remove this nonsense. God, there's two separate fibs going on here. What the fuck? It's chaos, I tell you. Okay, this is important. So I'm going to remove this yellow line. This white line matters. This pink line doesn't matter. This yellow line on the bottom side matters because this yellow line is playing a little bit of a role. But I want to delete this too. I'm not really too important. I rather focus on this from a horizontal trading range perspective, which shows me around the 236 is where we're getting our resistance right now. Again, that's pretty typical. Bottom side level to consider would be somewhere around the 51 cent level, just because that's a noticeable area. But honestly, like if we are going to see ETH and Bitcoin go back to like 40,000 Bitcoin and 3,000 ETH, we can see XRP stay strong at 70 cents. We can see that because XRP is so suppressed, so it might hold those levels. I'm not going to do too much TA on this for today just because I started the episode with XRP. But again, if Bitcoin goes up to 52, I would expect a $1 XRP. And if Bitcoin's going to start trading back to 40, I would suspect a 69, 68 cent XRP, back testing the W of neckline right over here and the back test level when this breakout happened. So whenever we see a straight line breakout like this, you always want to look at the back test area. So we break above, look at this, we back test our neckline of the W and then continue. That's a clean area to come back to. And if you look at my cursor, that's pretty much right where the lows are. If you go like that, you can see that it just back tested the same level. So 70 cent XRP is pretty strong. But there's definitely going to be some squirrely price action around the 382 into this trend line. This trend line is decent. Got the current yearly high. We have the rejection here around Rosh Hashanah. We have this attempt of a breakout in November. And since we haven't touched, but this is 3 clean touch points. And I would consider this trend line as something to keep right now in regards to a downsloping resistance line that could be in correspondence with all the other things we've been talking about with Bitcoin and ETH. And then anything lower than that, we have problems. But this isn't the greatest fib pull. I would look at it like this at this time. So something like this, and you could see that it did come back to the 888 fib, and that's a pretty strong level. So whenever we break out and then we back test the 888, getting below that is a really solid area for reaccumulations, and we only got that at like one time. And you see the RSI aligning below 30. Anytime RSI gets below 30 on anything, that's a top coin, a top 10, top 15 coin, it's pretty much a good time to accumulate. We only broke down there for a moment, and now we're starting to see somewhat of a bullish divergence. So got to see how this plays out. In regards to the bi-weekly, let's see what's going on here. This is a crazy chart, right? Like, most people don't talk about this. Zero, like less than 1 penny when XRP was doing this. And you got to think, all the coins right now that are less than a penny, like Vitho. So Vitho right now is 0.05. That was right here. 0.05. That was right here for XRP. Look at this shit. Imagine if Vitho did a similar move. And by the way, Vitho has already done it's already done some shit. It's already done a 10,000% gain. So, but that's not nearly as crazy as what we saw with XRP. So it's making me, if this thing is going to enter price discovery at a reasonable rate off of this, we'll just be conservative right there. Bring it up to about the 6 fib, which is where things like to go. It's 51,000. It's completely normal. We saw XRP do 70,000 on a complete move, and very similar actually to where, yeah, this actually does look a little similar to the XRP chart before the second run. That's not my chart. Sorry, let me find the right chart. I don't want to jump around too much. This is already over an hour long. Anyways, so from the bi-weekly perspective, it's great to see us on the fib levels, but we definitely want to be looking at some of our moving averages. We're right there on that 34, and we've done that before where we broke below the 34 with the SEC dump, but that was like a black swan for XRP individually. And since then, we have been holding this red moving average, the 34 exponential. If I hide my drawings, you can see. And we're right towing the line on it. Right now, it's at 78.8. So 788, and XRP is at 776. So we're talking about like a hair move up to closing above 80. That would look pretty damn good. It doesn't look great, though, to be trading below the 34 exponential on the biweekly. That's just facts. But we know XRP. We know it likes to kind of do its own thing. Like I said, I'd be much more paying attention to Bitcoin in regards to this. Bitcoin moving down to 40, you would expect 70 cent, 69 cent XRP, and we'll just leave it at that. So we're going to go to Matic Polygon, do a little bit of TA on this. Beautiful uptrend and a long uptrend, which is good. I don't like blow off tops, and crypto has a way of doing too many of them. Too much choppy garbage, and this coin looks beautiful. Okay, so, all things considered, if I zoom out, this is a rager. If we just take from this huge range here where it lasted about 500 and about 600 days before the breakout, this is a beautiful sideways range, but you could see the immaturity in the coin through all the choppiness. If we were to take a move up here off through its performance already, we're looking at about 14,000%. So that's not nearly how crazy it could go. We know it's about like 30 to 50,000 where it starts to like give up, and that would put us pretty much 50,000 would put us around the 3618. So again, at least $8 based off the performance of other altcoins. And right now we're sitting at 2. So 4x or so, 3.5x. And this uptrend is beautiful. This is a parallel channel. I don't need to draw it. It's pretty clear as day. All of our tops are pretty much in alignment, and all of our bottoms are pretty much in alignment. This chart looks clean as ever. The only issue I'm seeing here is in the short term, it's a double top. So it is a double top technically because we have the tops separated by at least a month. These tops are separated by a year almost, 220 something days. Ooh, is that 222? Because if it is, I don't like that. Yeah, oof. Okay. I'm going to say this and don't take this too seriously, but the fact that the tops were 222 days apart is definitely something kind of concerning, because on top of that, we have a head and shoulders forming. So we have left shoulder, head, and right shoulder. And this is a clean head. A lot of people like to call like things like this a head, like some sort of distributional crown top, but this is how it technically looks. If you study Forex, it's like a sharp cone. This is absolutely a left shoulder, head, potential right shoulder. So getting closures above, this is very annoying to do because it's so wicky. So above the 888 would confirm it for me. You know, daily close above 270, and I would consider this continuation and obviously price discovery. So above 3, but I don't like how these 222 days apart and through the year of 222, which we're in now, and the Hebrew year of 22. Maybe Matic has some Gematria tied to that. I don't really have time to get into that right now, but yeah, anyways. Yeah, breaking above this high right here would be nice, but you can still have a head and shoulders that tilts to the upside. And because this entire move was a beautiful parallel channel up, I just don't like that necessarily. And I'm sure there's divergences. Yeah, of course there is. So you have your high on your RSI going back here, and then you have lows on RSI while you have high prices. So there's bearish divergence. MACD is sort of just kissing, ready to make a move. So this could be something that we might want to look for the higher time frames to get some of an idea. Sorry. The weekly close back testing this level right here of the 618 is really nice, actually. This looks bullish. Like, I don't want what I said before to intervene. This is great. When I see some numbers like that, sometimes my eyes open. So the first level you'd want to keep your eyes on in price discovery is clearly the 1618, which would be around $4.30. And then the high level, probably 880, that's in alignment with like a 50,000% gain or so from the C word crash, which is about how 70,000% is where things like gas out typically. I know that sounds ridiculous, but it's just how it goes, you know? Crypto's weird. And when that's in alignment with the 3618 to 4236, you always want to be considerate of that. So typical level you would break out to after getting above the 1618 with a macro closure would be the 4236 into the 6 fib. So this shit could go to 14, but 5 to 6 fib, so anywhere from like $11 to 14 could happen in a single day, and then it could start a downtrend from there. We've seen that happen all the time. So it's really that 3618 you want to gobble up on most of your sell limit orders, and the 4236, that range right there, so somewhere 9 to 1050, and then above that you're just going to swipe through those levels. So some people are savvy and they'll put in like 10 sell orders just broken up all through those levels and not go any higher than that, because it's typically not normal for us to extend. And at that point that would be over 100,000% gains off the pandemic lows. It's a little dramatic, but if ETH is going to go to 10k, then sure, this shit could go to 15, 16. Why not? It would just be slightly higher than the levels I've already shared. Still, at the end of the day, not much of a difference. And, you know, the gain from there, from the conservatives, about 300, 400%. Again, much better to buy things below the 236, or if you do a bearish pull like I like to do. So you have you have your back test is what I meant to say. You do from your back test to your all-time high. And this 8, yeah, we didn't even get to it. Holy shit. Yeah, so this thing's been pretty fucking bullish. Good call for anyone accumulating this coin. I have some of this coin too now. I've had it for, I don't remember my first buy-ins, but I do believe I was getting it under $1, so it's pretty nice. So Matic, yep, looking pretty damn good. I would suspect it's going to be giving us some sort of rhyme and reason above 270, but until then, you kind of just want to be hoping that it doesn't start to break down below the 0.5 fib. Because if it starts to break down below there, then this would really start to look like a head and shoulders. And a head and shoulders, when something's had a double top, and that double top happens to be 222 days apart exactly, that's a little bit worrying. So beautiful looking chart, but still, it's already done so well. At this point, you would definitely anticipate a move to the 1618 at least, kind of like Cardano did, where Cardano had a beautiful run up, got slightly rejected below the 1618, and then entered a distributional pattern. That's very possible with something like Matic, given the gains that it's had thus far. So let's move on to Algorand. Okay, looking very interesting. Okay, I like this. This is very good. This is one of the normal Wyckoff patterns that we see when we get... So we have our box range right here to 160. It would look like this. This is like our box range. And it would backtest prior highs. And when you leave the box, you want to backtest it some more. And where we're at right now, we're definitely breaking below the box with a little bit of a distributional top here on the upside. So this is a little precarious. For anyone who's been in this coin for a while now, you want to be considerate of where we're at in this structure, which could be a further breakdown. Just because you see what it's done, it's extended up to the 1618 and got rejected, and now it's breaking structure. So the structure was here, somewhere around 155. We broke below that. And if this doesn't start to recover above this high right there around 185, this could get bad. And this looks a lot like the Cardano chart as well, where we see it can't get above the 1618. The rejection leads to a lower structure. And you would have wanted to hold the golden pocket. Actually trading below the golden pocket into the 0.5 fib after a breakout is not a good thing. We saw that happen with XDC as well. And XDC was a rager. Like, it did so damn well, so much better than this. And when you see a coin do really, really well, like 50,000, 60,000% gains, and then start to break below the golden pocket on the macro fib pull, that's a sign of like, get the hell out of there. I might not have the best chart on Algorand because I'm seeing right here the all-time high was around 330, which is very interesting. I might have to look into that deeper. So, of course, it looks like it has a prior all-time high that exceeds the high that we just got to, which is a good thing. That means that we haven't entered a true price discovery with this breakout. And this could just be a backtest of a key level. So if I was to pull the fib from like a macro fib from that low to this high, we're going to get a different story. So yeah, we could see right here, this is the 382. I know it looks like dog shit, but this would put us up somewhere into like the 12, 13, 14. And if I was to measure off these lows up to that level, we're looking at about 8,000% or so. So not horrible. But I'm going to keep the fib pull the way I had it just for the short term. It would be nice to have the macro chart though. But with that being said, it doesn't really matter. We could still use this move that I've had it set up with anyways, because we know that the support level is at 6, 7. We have a triple bottom, so we could confirm that. And we have here, we know that's a high. It's not like a crazy wick to the sky. It's conservative. We almost double touched it. And since we've broken above it with clean rejections at the 1618. So this is a good fib pull. And if we were to take the amount of movement off the top down to the lows, 64% is not even that bad. We've seen altcoins hit highs like this and then melt down 80 to 85%. And I guess the reason it hasn't come down that low for Algorand is because from the pandemic lows to the top was only 1,200%. So that's not that much. It's very mediocre. Now, that's not to say that that's a bad thing. That's actually a good thing. You kind of want to be in projects that A, aren't broken out into price discovery, B, are, kind of suppressed with really long horizontal trading ranges, and C, haven't done so amazing off of the pandemic lows, because that the possibility of upside is more in your favor. The ROI to the upside is way more probable, and a 6-spot fib extension for this would not be weird. But again, going off of the prior pull, this thing should at least be getting into the $10 range. Otherwise, it's just a bad performer, and that would be like an 8x, 7 to 8x from here. So anyways, yeah, until it gets above this 186 area, this high right there, it's choppy and it's within the golden pocket. So that's a normal area to chop. And then in regards to daily closes above the 1618 is when you would expect this thing to actually start moving. So until then, it's kind of stuck. And then on the downside, closing below 126, this 0.5 fib, that would look bad. I would suspect the bounce to the 112 area might be quick, considering all the structure that we've built at that level. But I would not like to see that, personally. Let's go to Mana, Decentraland. It's been some time since I've done TA on this. I'm just going to show you what I immediately see. We'd probably push through this pretty quick because... Okay, so this was the metaverse nonsense that came into our reality. Straight line breakout. Look at this. Back tested the 1618 and then went straight up to the 4236. See, I don't like this because what I've been teaching you guys for months now is when you get to that 4236 level, you really need to bash through it further to expect anything higher. And for now, we could be building out some structure, maybe back testing the 1618 again for another push. And I suspect that would be possible if, we see a bullish move with Ethereum. But for now, let's see how much this is gained from the COVID lows and make some judgments off of there. That's only 11,000. So this has juice. Or never mind. So the reason I'm not taking from the wick low is just because it's not really that smart. I'm taking from when we're getting some touch points before and after. So if you guys want to know why I keep doing that, it's because I'm trying to be conservative. So yeah, to the absolute high was about 23,000%, which is telling me this thing could go higher. And like I told you many times, the 6-spot fib extension would be normal. And that brings us into that 30,000%. Above 30,000 is really overheated. But we have seen anomalies like 50,000, 60,000% before. In this run, at least, from COVID lows to highs. But hitting and rejecting at this 4236 is everything I teach you guys. I always teach you, and that's why when I set up my fibs, I make the 4236 red colored. Everything above that is red, right? Above the 6, I made those white just because that's like kind of the area to show me the delineation between like extremely oversold. But anywho, I color coordinate them like where they're all white except for the golden pocket is gold. Then the 888 is green. That's like the money point. That's where I typically want to buy on my bearish retraces. And then when it comes up above the 3618 to the 4236, I make that red because that's where it's like danger zone, like get the hell out. And, RSI here went to 95. That's bad, dude. That's typically the end. After it hitting 95, it created a bearish divergence by going up higher in price with a lower RSI, and it swiped perfectly to the 4236. So again, this is only really going to leverage on either one, some sort of narrative push of more metaverse garbage, or it's going to be ETH having its finality of the alt season. And even then, I would suspect this thing probably only comes up to the 6-spot fib extension around $8. I would not be buying into this coin right now just because the opportunity is so little. It's only 180%. There's so many better opportunities. And because this had a straight line breakout, guys, if this shit cannot hold the 1618, guess what's going to do? It's going to fall right back down to the golden pocket. This is thin air. There's no trading between $1.50 and $2.50. So really want to be careful with that shit, I would just be cautious. If this can't hold the 1618, not only is that a technical level for it to hold, but that's the level where you see that there's no prior trading range. This could get ugly, and it would look like a big Bart Simpson head. It would look like a top hat. So if you've made money on this, if you've been building a position in this coin last year, you're doing okay. Like consider de-risking at 300 to 500%. And because it's swiped up through its technical targets, I wouldn't get too much more bullish on this project. Even from buying back before the first alt season last year, this is a pretty decent move. Yeah. So downside support would be 240. Upside breaking $4 would move us up probably pretty quickly to $5. And then I would anticipate if we're going to enter price discovery, $8. And then it would probably start to gas out. Can it go higher? Absolutely. But that's the technical analysis. So let me move on to Cardano very quickly. Cardano is doing pretty decent off the recovery. This Cardano chart, it's not looking great to me. This is absolutely problematic, this sort of move, and the way that it looks in structure, breaking below the 236. So the fib pull is from this level right here, the prior all-time high back in May, down to the swing lows here in the structure. And you could see pretty much, yeah, that right now getting above the 236 is good. It's showing us we might be moving into the bull trap area, but this is a weird looking chart. It almost actually kind of looks like the T-Fuel chart. So I just don't know. With the market cap of Cardano being so high comparatively to T-Fuel, there's clearly more chips stacked in the favor of T-Fuel being like a governance and not like a number, not the actual project itself, like Theta. Cardano is the project. So, I mean, yeah, it should have more room. This should have one more juice move up to 8. This should move to like at least 550 to 8. At least 550 to 8. That should be the move. So off of the lows, that's pretty decent. Again, if it does get all the way up to those levels of like 8, we're looking at like a 400% gain. Again, not really the coin I'd be looking for big accumulations on, just because it's already kind of made the move and there's not really much excitement into this project in regards to any updates or anything. And it's already had all of its big major updates. It's starting to lose the juice that it used to have, and because it's a coin that goes back in the day, pretty far back, that's one thing to consider. It's something I told you guys about with Dash, like these OG, like Ethereum Classic and these OG coins. They don't really have the FOMO that I would anticipate some of these newer projects to have. Some of this newer stuff that's hit the scene, but that's just going off of like the way that FOMO alt seasons work. The FOMO blow off top alt season is all about just narratives and pushing, whatever. Again, if ETH breaks into price discovery, I do suspect Cardano will start to enter a new all-time high. Anything above the 1618, and then we'd be looking for continuation. And remember what I told you a little bit earlier, when we saw this rejection below the 1618, that was a sign to me that like, okay, this thing might have completed its run and now it's ready to retrace and build some support. And it pretty much came all the way down to the lows, to the prior lows in the structure, and RSI even got into oversold level at 25. This might not be a bad project to accumulate if you want to play conservative, because it's a high market cap, it's been down from its all-time high. If you're banking more on the bullish side of things, this would not be a bad project to accumulate due to trying to keep your stuff more conservative. For me, I've already played all the conservative plays going back like a year and a half, almost 2 years ago. So now I'm more risky. I'm pushing more things like the riskier plays like VTHO and T-Fuel, because I just can deal with those swings. I have the emotional control and etc. So once you've kind of been there, you're ready to, you could deal with it a little bit easier. For those of you that are very emotional and you're not really good at handling that kind of stuff, the huge swings in the market, and you're willing to take a little less ROI, things like Cardano are pretty much the way to go. Just because high market cap, it's proven itself. It's, but there are some issues. Cardano blockchain is not being used. Like Tron blockchain is being used. Cardano is like a useless technology almost. Nobody's really actually using the blockchain. Nobody's really building on it too much. And with this metaverse narrative coming in right now and the Phantom ecosystem doing so good, I just don't see where Cardano would fit in with that. Something like VeChain, on the other hand, it makes sense. It's a logistical powerhouse in China. China's owns the world now. I mean, my thesis around VeChain makes a lot of sense regarding supply chain issues and how, China owns like 69% of all the wheat, I think, or all the maize, so all the corn stock. So, I mean, I know it's ridiculous, but like you kind of want to invest in projects that have solutions to things that are clearly moving blockchain, like logistics, and VeChain was there first. So yeah, I mean, it makes sense why I decided to invest in that. It wasn't just because of like some random idea. And let's move on lastly to Atom, because this is one of those breakout coins that's ready to pop. Beautiful. Okay, so we're looking pretty damn good. We are pretty much back testing the tops, and this is looking pretty good to move into the 1618. So you want to be keeping an eye out on the 1618 for Atom. Cosmos getting above that on the daily close, and I suspect this will start to move to the finality of its run, which would be somewhere around $112, as high as $155, and that would be a sensible move, because from there to about there is about, I mean, it could go way higher, but I believe the market cap on this is pretty big. So yeah, if I was to take off this main consolidation range, again, touch points here and touch points here, so that's around 230 is a very nice level to pull this from. Yeah, we're looking at 6,000. This could go higher though, given a lot of coins have moved like that. We would just have to consider market cap at this point, but again, when we have the pull here to there, that's a swing of almost 75%, Look at this move too. You have your crown distributional top here. Your buying climax was around here. Your supply test fake out was up here. This is a bull trap. Then you have your selling climax. Didn't spend much time down here. Once it got above the 236, this raged to a new all-time high. I believe. Yes, I believe. And then this back test all the way down to the 0.5 fib. Huge fake out. Breaking through the golden pocket. V-shape recovery. Beautiful. This is what altcoins do. Altcoins typically like to overextend themselves. So with traditional technical analysis, you'd anticipate the 618 the bottom of the golden pocket, but altcoins will be like, fuck you, and they'll go down another level and then bounce. And like what I teach you, once you get above the prior highs in the structure, that's when you get bullish, like really bullish. That was the high in the structure, pretty much around 33. Once we got above that, we slightly made a double top, and now we're just building support in these areas. That's very normal. Altcoins, when they break, they're explosive, so it does take some time to build. That's to break through that sell wall. This is like a sell wall, right, at 44. Of course, it's 44. It's always like some key, like, numerological significance. So anyways, the 47 level, coincidentally moving into the 47th year of Satoshi Nakamoto. I would not be surprised if once that breaks through, this thing moves into 3 digits. Probably get to around 4236 within 15 to 20 days. Now, on the downside, if this does want to pull back again, it would be 34 to 33. So in the event that some of the like Bitcoin and ETH pull back some more, you'd want to look for around 34, 33 for a bounce. And this could be a good coin to get into. Regards to, I do have to look at the more macro chart though, because if I was to pull fibs like this and see where we're at, I do know things make it up to the 10. And that puts us at around, we'd have to see. We'd really have to see. For right now, I'd be more interested in that like 150 area as like an overextension a little bit. And the other way we could perceive this is by looking at RSI. If we're seeing RSI on the daily hit 90, 95, then that's a clear time to like get the fuck out. So you could always look at relative strength index indicator as well to determine that. You see right here, it hit 87. The prior high here was around 90. When it hits those levels, it likes to gas out. So you could always keep like when bull runs end, typically come to a finality, it's when RSI gets above 90 into the 95 area. And we see that even on weekly charts. Right here, the weekly chart, it got to 90. And then that's when you started to see a distributional top form. I know it's really hard to see, but we'll zoom in and I'll show you. So we get RSI of 90. That's why I called this the buying climax, and this the ST, the supply test to the upside, which is a bull trap, because look at what it led to, a huge dump fake out. But if you would have just got out at 90 RSI on the weekly, you would have gotten out at a great time. But most people, they wait too long, and you kind of want to use RSI in conjunction with all the other things that I teach you to be able to safely get out of a market. That's what it's all about. It's not just about making money, it's about preserving wealth. So just very, 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 very quick thoughts on Phantom. Phantom is the same concept as what we just talked about with Cosmos. The only thing is with this, we are getting we've touched the 4236, big rejection, bounced off the 1618, and I went over this actually with, I went over this with a project that like perfectly did this move where it tapped the 4236, then it came swiped. Oh, that was Mana, right? Let me just show you. Boom, right here. Okay, so you see Mana hit the 4236, then it came down. Then we look at the Phantom chart. You see where it came down to. It came all the way down to the 1618. It dumped into there, built the support, and then rallied. And now it's starting to recover. And I told you guys with Phantom in the last episode, we can see this thing go up to the 6-spot fib. We can see it go to 434 to 520. So just keep an eye on this. If this does break out, you want to sort of get ready between $4 and $5. And if this breaks RSI at 75 and gets above this prior high, this could move to the high 80s into 90. And if it could clear this divergence that it's in right now, where you could see it was at 90 RSI, but the price was at $2, and here the RSI is at 68, but the price is at 320. It's a bearish divergence. But if it could clear above this level right here, the prior high at 73, 74, and continue up into the 80s, that's really another sign of like, you got to get out soon, because how much more can this thing move? I mean, come on now. It's already done so much gains. We're looking at off the COVID lows. If it was to go up to there, we're over 100,000%. Okay, 120,000%. So you don't want to get greedy on this. And if you're already in this project and you want to secure profits, this is a great time to do it, because this is within double top area. Double top. That's a thing. Okay, this could absolutely. I'm not saying this will happen, but this could absolutely go to 370 again, right where it was here. Get rejected at the 4236, maybe even slightly higher, and then come back again. That's where the double top comes into play, and you want to be cautious because I mean, come on, this thing's done over 100,000% gains. It could go to the 5 or 6 fib, but I wouldn't I wouldn't be banking on much higher than that. It's possible, but technically that's about enough. And then the final one on Harmony 1, same exact thing I just said. The chart is very similar, except Harmony 1, it is more like the Cosmos chart. So we've broken down, back tested the 618, and now it's popping off. This coin has a little bit more juice, all the way up to about 117, 711 backwards. Got another 150 to 200%, but the 4236 is typically the first level they get rejections on, and that would be about 140% more to move. So again, once this breaks into price discovery above this 30-40 cent level, that's where it can move, and keep an eye on that for this if you're in this coin already and you're looking to get out. So I've given you guys some exit strategies on a bunch of coins in this episode, a bunch of information. Wow, packed full of technical analysis. I hope this was informative for everyone. I do have coming out very soon, probably in a month or so from today. I'll probably try to finish it before the end of February. It will be an exit strategy blueprint, which will be already added to the mastermind course. So anyone who has my mastermind course, I'll start adding those videos once they're completed in transition into March time. And then I'll be releasing it as a separate product for those people out there that don't want to get a course, but they just want to have some sort of, affordable exit strategy breakdown. Not only how to exit the crypto market, but how to build a long-term investment thesis post-bull run. So for those of you that have cashed out and want some plans and strategies for how to use the money you've cashed out, how to park it in certain places, or perhaps how to divvy it up to put in certain areas to reinvest in businesses, or perhaps the market again to reinvest in the market, so I'll be giving all those strategies into that, and it'll be affordable. It'll be absolutely comprehensive, like everything I do. I'm planning on probably keeping it under 20 videos, but again, it will be added to the mastermind course for anyone. And I'm going to give myself a timeline of at least a month or so from today, just so I could do it well, like I did with my advanced trading course. It'll be running through my website. So, yep, it's exciting. New product coming out that I believe will benefit everyone, regardless if you have my mastermind course or not, and you're interested in that information. I do go over a lot of that stuff in my Red Pill episodes like I did today, but this one will definitely be more comprehensive, and it'll be, for those people that are really trying to learn TA and how to utilize the TA and the Gematria together to build a strategy to get out of coins. This way they don't need to ask any questions. They don't need to wonder, you could just be able to have this forever and use it on your own. And that's really what I want to do for everyone. I want to give people educational material that they can use on their own, answer their own questions, become empowered, and do their own analysis, take control over their finances. So anyways, I hope you guys have a beautiful rest of your weekend. Much love.